You know the name Michael Burry, right? The guy who basically became a legend for calling the 2008 financial crash? Well, he's back. And this time, he's not just whispering. He's screaming that the biggest crash in history is coming. And he's pointing fingers at some very specific targets.
So what's he saying? He thinks AI is just one giant bubble, completely fueled by hype. He's convinced that things like Bitcoin are about to crash, hard. And get this, he believes the entire stock market, which is kind of being held up by just a few big tech companies, is teetering on the edge of collapse. And this isn't just talk, He's putting his money where his mouth is. We're talking billion-dollar bets against the market.
Okay, so here's the billion-dollar question, right? Do we listen to him? I mean, when the guy who nailed the last crisis says another one is right around the corner, should we all just run for cover? Or is there maybe a little more to the story of Michael Burry than the movie lets on?
All right, so here's how we're going to break this down. First, we'll dig into his new warning. Then we're going to jump in a time machine and go back to see how this whole Big Short legend even started. We'll look at the, let's just say, messy reality behind that famous trade. After that, we'll check out his track record since 2008, and that's where things get really interesting. And finally, we'll ask the biggest question of all, is his entire way of thinking just outdated? It all wraps up with a key takeaway for you, so let's get into it. So, first up, the new warning. It's like Burry has put his Cassandra hat back on. The prophet of doom that nobody believes. And he's not just firing off warnings on social media. No. He is putting some serious money behind his belief that the whole market is headed for a fall. His argument is actually pretty simple. He sees AI as a massive hype bubble. He's worried that the market is way too dependent on just a handful of huge companies. And he's actively betting against names like Nvidia. Oh, and Bitcoin? He calls it worse than tulips. That pretty much tells you everything you need to know about his take on speculative tech. But look, to really understand if he's right this time, we have to go back. We need to understand his origin story.
All right, let's talk about how the legend was made. Because before the movie, before all the fame, Michael Burry wasn't some globe-trotting macro genius. Nope, he was a totally different kind of investor. Way more focused, way more, well, disciplined.
See, Burry came from the school of value investing. We're talking Benjamin Graham, Warren Buffett, that whole world. For these guys, it's not about predicting what the Fed's going to do or what's happening with global politics. It's about getting your hands dirty, obsessively digging through financial statements, balance sheets, cash flows, all to figure out what a company is really worth. He was a stock picker, pure and simple, not a fortune teller.
And you know what? He was really good at it. His fund, Scion Capital, had some fantastic returns in the early 2000s. But, and this is a huge but that people always forget, his numbers weren't exactly unique. Other top value investors were doing just as well. So yeah, he was respected, for sure, but he wasn't a legend yet. All of that fame, it all came down to one single trade.
And that brings us to the bet itself. This is the trade that made him a legend. But the reality, the messy, complicated reality, is that this one bet came dangerously close to destroying him and his entire fund.
So get this, he placed his big bet against housing way back in 2005. But for the next 2 years, nothing happened. In fact, the market just kept screaming higher. His fund was just bleeding cash. He was down almost 19% in 2006, while everyone else was making a killing. By 2007, his investors were literally revolting. He had to take the nuclear option and freeze their withdrawals, which, as you can imagine, led to lawsuits. For a very long time, he didn't just look wrong, he looked like he'd lost his mind.
Can you even imagine that pressure? We're talking about $500 million. That's 92% of his fund's assets, all trying to flee at once. The fund was running on fumes, he was under unimaginable stress, and pretty much every single person in his world was telling him he was crazy.
So here's the key takeaway, the part the movie kind of glosses over. The Big Short wasn't some clean, brilliant victory. It was the right idea with absolutely terrible timing. He was only saved because the entire system collapsed at the last possible second, and because he took that crazy step of locking his investors in. Plenty of other smart people had the same idea and went bankrupt waiting. He just barely made it.
Okay, but what happened next? What about his record after 2008? Well, this is where the story gets really interesting. Because when you look at the data, a very different picture of Michael Burry starts to emerge.
If you just look at his big calls since he became famous, a pattern becomes crystal clear. He's been consistently bearish and consistently wrong. He predicted a double-dip recession in 2010. The S&P 500 went up 15%. He called for a meltdown in 2017. The market shot up almost 20%. Remember his huge bet against Tesla in 2020? Yeah, the stock then went up 700%. And just last year, that massive $1.6 billion short against the entire market, it got completely wiped out when the market rallied 20%.
So what's the result of all this? Well, over the last decade, his fund has actually underperformed the S&P 500, the very thing he keeps betting against, by 5 to 7% every single year. That's not just a bad year, that's a lost decade. If you had followed his big macro predictions, you would have missed out on one of the biggest bull runs in history. Ouch. Look, the point here isn't to make fun of the guy. He's obviously a brilliant mind. The real question we need to ask is, why? Why this consistent pattern? What changed after 2008 that threw him off his game?
And this, right here, might be the answer. Remember how we said Burry is a Benjamin Graham-style value investor? That framework is amazing when fundamentals, like earnings and cash flow, are what drive stock prices. But after 2008, the game changed. The market stopped being about just fundamentals and started being about liquidity. It became about capital flows and what central banks were doing. It's like Burry is using an old, beautiful hand-drawn map to navigate a world that now runs on GPS. He's playing by a different set of rules, rules that might not apply anymore.
And this difference in thinking perfectly explains why something like Bitcoin just completely short-circuits his brain. If you're a classic value investor, you see an asset with no earnings, no cash flow, and you immediately think, bubble. It's a tulip. But that's missing the entire point, isn't it? Bitcoin isn't a company. It's not supposed to be valued like a stock. It's a piece of infrastructure. It's a technology for a global settlement network. Judging it by its cash flow is like trying to value a highway system based on how much profit the asphalt makes. It's just the wrong tool for the job.
So let's bring this all home. What's the big takeaway for you? As an investor, what do you do the next time one of those scary headlines pops up? Michael Burry predicts the end of the world?
Okay, here it is. 3 simple steps. 1. Question the celebrity gurus. Never, ever outsource your own conviction just because someone was right once, even if they made a movie about it. 2. Understand the game you're actually playing. Today's markets are all about liquidity and capital flows. That's the structure. And 3, and this is the most important one, build your own system. Look, the biggest mistake in investing isn't being wrong, it's having no system at all and just bouncing around reacting to every scary headline you see.
So I'll just leave you with this question. Are you going to build a system for the world we live in today? Or are you going to stay stuck, just reacting to the noise from yesterday's heroes? Ultimately, you have to ask yourself, are you actually investing or are you just reacting?